morning. You got that money, Dad?
I hear it. I hear it. I'm just trying to build that little pipeline to funnel some of it this way. I hear it.
I know. I love it. Well, good morning, you guys. This is Speaking Facts in 15. And today we're going to be talking a little bit about money. I'm your host, Charlamagne Armstrong, and I got my co-host here, aka my dad. Take it away.
Hey, what's up, everybody? J.R. Stewart, and this is again Speaking Facts in 15, and it is brought to you by KissWealthNow, which is satisfying or taking care of all your commercial and residential real estate needs.
That's right.
We're going to be just kind of talking about the home buying experience, and especially the first time home buying experience, because that takes getting your money affairs kind of in getting your ducks in a row, so
right.
And who better to speak with than my daughter, who is now a realtor as well as a mortgage banker and the rest of it. So so I figure that there's a lot of people out there that probably need to know this information, and I know you spend a lot of time getting it out to people, but what better way to do that than to take up this platform. So
exactly, and on a Saturday morning at that. Normally you guys would come to you on a Wednesday, but I was funning in the sun this past Wednesday. so
and paying for it on Thursday and Friday.
That's right. They say go on vacation if you want to, because when you come back, it's double time. So it was double time for me. But we wanted to get the show in before the week was up, and we did it. We achieved our goal.
That's right. So I'm just going to kind of approach this from the beginning. I'm a Harvey first time home buyer, or I'm a maybe Melody first time mortgage getter, but I want to purchase a home, and I have not ever done that before. So what should the first time home buyer be thinking about in the beginning? What kind of stuff should they be doing?
Great question. So I think every first time home buyer's first thought is nervousness, because they don't know what it's going to take. But definitely the first thing is to start keeping a record of your documents, because any lender that you reach out to, they're going to ask you for 1 month worth of paycheck stubs. If you're not an employee and you're self-employed, then they're going to be asking you for 2 years of tax returns. They're also going to be asking you to go along with those, the W-2s used to prepare those tax returns, or the 1099s. You need to get your bank statements. We usually ask for 2 months of bank statements, have a copy of an unexpired driver's license. If you receive child support, then we'll be asking for proof of receipt for that, a divorce decree, child support order. If you're a veteran, and Dad, thank you for your service, we'd be asking you for a copy of your DD-214 so we could request your certificate of eligibility. So just some of those, we have, with a mortgage, it's important everybody knows that we have to verify what we're stating you earn, and of course your assets. And so we have to verify that. And I like to say 2, 2, and 2. So we're going to look at 2 years residency, 2 years employment, and then 2 months bank statements.
Okay, that's a good way of looking at it. 2, 2, and 2. So I would definitely want to look at. There's a few things I focus on that you said. Is one, that if I am self-employed, my employment history is going to have to be longer than if I am employed by someone else. If I am
not necessarily, well, yes. If you are self-employed, you are correct. It is 2 years of that company. And sometimes we can get by with 12 months. But if you're an employee, we still have to have 2-year history, but you could have had several jobs. So very good point.
Okay. I also heard that you want to make sure that any financial documents that pertain to you, you want to kind of have access to them, being your monthly bank statements, credit card. If you've been making payments on credit cards, having credit card statements available, which kind of leads me to the next question of credit score. Now, what should the first time home buyer be doing to either what's a reasonable credit score they should have, and if they don't have it, what should they be doing to get there? I guess that's the question.
Very good question. So, in this market, things are a little bit different. We've seen the rates go up, we've seen home prices go up, and a lot of people feel like I'm out of the market when that's not necessarily the case. So, with our company, with a government loan, FHA, you can buy a home with a credit score as low as 500. And I've had a lot of people say, get out of there. That's not true. We do it all the time. If your score is between a 500 to a 579 and you have 10% down that can come from your own funds or gift funds, then you could definitely buy a house in this market. If you have between a 580 to a 600 credit score, your down payment would be 3.5%. And I'm going to put a small caveat in there, unless you're going to buy a home within a county that has down payment assistance, then you could receive down payment assistance, but it would have to be a county grant. If your credit score is 600 or above, your down payment could still be 3.5%, but you can receive down payment assistance. So you can see that with a lower credit score, you are able to purchase a home. Of course, the better the credit score, the better you feel about you and your financial outlook, your financial portfolio. But if you are a person that I like to say has had life happen, don't count yourself out. And really, in this market, it's definitely your time to shine. It's your definite a time for you to utilize that you are able to purchase a home because of the way the market is. So definitely, when it comes to your credit, take a look at it. Make sure that you're not behind on anything. Again, if you were behind or maybe thinking about, oh, I'm going to be behind, try, especially if you want to buy a home, try very, very hard to just keep everything right where it needs to be. So therefore, your credit scores don't take that huge dip if you do have a late.
And I want to divert just a second and talk about where your credit score should be, because this is
Mm-hmm.
something that I had to learn the hard way,
Mm-hmm.
and something
Uh-huh.
that the nonprofit that I work for, Future Leaders Outreach Network, we go into schools and things, and that's one of the things that I really push with young people, is to try to get an understanding of just basic credit, because a credit card company will give someone that's never had one, they'll give them a credit card and just, they don't care, if your credit score takes a hit. They just want to, because they're insured and they're going to write some of it off anyway.
Mm-hmm.
So just basic rules, and actually these are things I had to learn the hard way. But there's a difference in the credit, the amount, your credit card balance, and available credit when it comes to a credit score. Those are two
Right.
different things. So
Correct.
if you have a credit card, unless it is an absolute emergency, do not charge more than 30% of the credit card limit. That's the word I wanted
Right.
to use. Do
That's
not
right.
charge more than 30% of the credit card limit. Because I know that, well, the card has got a $3,000 limit. Okay. But if you
Right.
charge more than $1,000 of that $3,000 limit, then the credit bureaus and the creditors start saying, this is a person that likes to spend money. So we're
Right.
going to drop the credit score, because they're becoming more of a risk. The
Right.
higher, the less available credit you have, the more of a risk you are when it comes to paying your bills.
Correct. And I'm glad that you said it like that. I tell people all the time that your credit limit, the credit extended to you, really needs to be thought of as a savings account. And if you treat it as a savings account, then it's going to be there, of course, when you need it. But if you have at least a 2-year history where you've kept your credit card balances low, and you've not racked them up, then your credit score will be high. It'll be a reflection of that. I was speaking with a young lady the other day, and I won't say the company, but it's an online bank, and they allow you to load funds on a card. And of course, that card will report to the bureau. Well, while that card reports to the bureau, to show that you've loaded funds. She was like, well, yeah, I load the funds and then I use it because I'm building credit. And I said, well, unfortunately, that actually dropped your score because you loaded 450 and you spent 450.
Yeah.
So that you should be loading those funds, letting them sit there, and like you said, using 30% or less, so that way you can truly build your score. So that's the thing about credit, is that credit cards, I should say. If your credit cards is the quickest way to increase your credit score, but also by that same token, it can decrease your credit score just as fast. So if you're trying to increase your credit score and build that score up, it's very important that those credit card balances stay 30% or less. And if you're really trying to give it a good shock value, run $10 balances on those credit cards and you'll see huge increases really quick.
And the other thing that I'll say, and then we'll move back to the real estate because that's why we're here. But the other thing I'll say is that if you can at all, and this is something that I've managed to do, and it's not easy, but I pay off my credit cards every month, because not only does that raise your credit score, but you're not paying the high interest on the credit card.
Right.
Because the average person with a mid 600 credit score is usually, they usually have a card that's around 10% or up to 25% interest. So that's a lot of money to pay on a monthly balance because it's compounded.
Right. And here's the thing. I tease when I say this, but not all credit is good credit. So, try not to, when they're extending you credit cards from all these different companies, a lot of times what I suggest to people when they're building credit is to get credit cards that report to all three bureaus, but do not pull your credit. And you guys, if you want to know what those ones are, definitely reach out to me. I'll send them to you. The credit cards that don't pull your credit, but do show on all three bureaus, they are secured, but they definitely help to boost your credit score. And also another extension of your credit that people don't think about is your bank account. So if you're paying your bills on time, but running negative in your bank account every other day or every month, it looks like you're robbing Peter to pay Paul. Remember that's statement.
Yes, that is robbing. Yes.
Yeah. So if you're racking up a whole bunch of NSF fees, that doesn't look good either. So just remember that bank account is definitely an extension. And I tell you can balance your bank account down to $0 or 3 cents every month. That's absolutely fine. That's not looked at negative. But when you start having those overdrafts, then you're looking as though you're not a steward of your money, right? A good steward of your money.
Yeah. Yes. And it's easy to get steward and steward mixed up in the tongue. So but
especially Ron Stewart. No.
But credit, your credit and your finances are really the foundation that we're going to use to buy a home, and that's kind of why we spent a little time there. So a person, what would you really advise for a person that's got these things together? Well, so where does a realtor like yourself help in the process?
So if a person has everything in order, they first want to apply for a mortgage. And my company, KissWealthNow, and I'll spell it out, KissWealthNow.com. A person would go there and they would actually click Get Pre-Qualified Now. And the beautiful thing that I love about our website is that when you set up that username and your password, it sticks with you for forever, amen. And you're able to see your loan as it is, and any updates come to you instantaneously. There's no lag time. So you're able to see your loan move from processing, underwriting to closing. You're able to see what you're approved for, what your interest rate is. There's no secrets. Everything is there for you to see. And so once you complete that application, we get back to you in 4 hours or less to let you know that you're credit approved. And then at that time, we request those documents that we talked about in the beginning of the show here. So if you're just now tuning in, make sure you go back and watch the whole thing. But if you don't, when you go out to the website, don't worry, don't fret. There's a list there on the website that lets you know the documents you need to upload to make sure that you are able to get that loan approval. So yes, you can get out shopping with your realtor and find that dream home, whichever that is. And so I always say the hard part, honestly, for most people is finding a house, because you see all these different types of homes. Look at, there goes DJ.
What's
Good
up,
morning.
DJ?
He's going to jog this morning.
Oh, okay.
he got accepted to college, and he got a scholarship, and he's trying to get in shape for
for what's expected of him next, huh?
That's right. So and look at KissWealthNow, of course, is doing this at home, and we want you to be watching these type of podcasts from your own home. So it's important that you do that. And, another thing that just popped into my head just now is that if you do currently own your home, and there's a lot of equity in homes right now, tons of equity. So if you're wanting to maybe take advantage of getting some equity out of your home, KissWealthNow can help you with that as well. You do not have to refinance your current first mortgage, because many people took advantage of the very low rates and refinance. So you can definitely leave that mortgage in place and take out a home lot. I call it a home lot, a HELOC, and that's a home equity line of credit, and be able to take some equity out of your home. So maybe you could pay off some of those credit cards,
especially the high interest cards.
Yeah, those high interest credit cards, and maybe pay off some of your loans, or start a business, or send that kid off to college, whatever you need to do.
Yeah. Well, I think we have
covered a lot.
Good.
And I want to Dad, just real quick, because it's on my heart and my mind, and I wanted to bring this up. I don't know if you've heard about it, but there's a lady named Carlethia. They called her Carly Russell, and she went missing on 7/13 in Hoover, Alabama. She had just gotten off work, and should bring my phone up to the screen, but this is her. She just gotten off of work, and it was about 9:13 or so at night. She actually called 911 to say that she saw a child walking down the highway unattended. And so the police said, okay, we got your location, we're coming. So she gets out the car and calls a family member to say, oh my God, there's a kid here. I'm going to, help the kid till the police get here. Well, they hear screaming. She's now missing.
Wow.
And this happened not last night, but the night before. She's now missing. And I just think it's a sad story that, that whomever used the child as bait.
To do that.
Yeah. So just want to say her name, Carlethia Carly Russell. And I'd be remiss if I didn't mention it, because we definitely hope that whoever took her or saw her, can definitely give some information to bring her home safely, because that would have been me. If I saw a child walking unattended on the highway, I would have pulled over, I would have called 911, and I would have done the same exact thing. Just being honest, you know what I
mean? Yeah. Same here. I think that any person that loves life and the people that are that are participating in it would have wanted to have helped in that situation. And it's just sad that something like that would happen. And when you said it, it struck me, because being an artist myself, I often see the saying, life imitates art and art imitates life, presented in front of me. And I saw an episode of Criminal Minds several years ago where a child was being used as bait to kidnap other children, and the child that was being used was themselves a prisoner, and the trauma that was on them was bad as well. So I'm just wondering what kind of trauma this child is going through that's being used to draw these people in. So I want to pray for the child and pray for the soul of the people that are using this child, that they are, that they have a Damascus Road moment, that they are hit with, that they are overcome with the need to change their ways, because that's sad. It is. So yeah, thank you for doing that, because maybe, someone will see something. This can be a large platform, so maybe someone will see something. I guess we have gotten
and it
to
just
the
takes
ish.
one person to bring it up.
That's right.
We've gotten to the ish of the show. And you guys, if you have questions about KissWealthNow, the services we offer, we're definitely here for you, Dad. Thank you for asking those wonderful, wonderful questions. And basically the takeaway is that during this time, you want to marry your house, but you're going to date the rate, because when the rates go down, you're going to be able to refinance. And this is the perfect time, I say, for a person to take advantage of being able to purchase a home. Because when the rates were really, 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 really low, many people were in the market and they were looking for homes for months and years. Well, now's the time that if you really want to buy a house, it may be a little bit more expensive, but you'll be able to get that home and then, again, get that rate down when the market turns. So with that being said, I'm going to finish playing money.
That's right. Because that's it's we're not to be slave to it, but it definitely helps make the world go round.
That's right. So KissWealthNow definitely has the money, and we can get you money.
and and with that, that's why it's good to have a realtor like my daughter to help
That's
you,
right.
to help you to navigate you through the process. We're going to go. We're going to attempt to be back Wednesday on regular schedule, but
that's what we will be.
Yes,
we're claiming it.
That's right. But in the meantime, watch your money, guard your money, use your money wisely, and your money will
That's right.
will get you through.
That's right. Well, y'all be blessed, and we will see y'all next week. Bye.
Bye, y'all.